Look, if you think altcoins aren't going to pump this cycle, then respectfully, you're just not paying attention. Yes, Bitcoin spot ETFs lit this fire under the bull market, but it hasn't equated into a massive altcoin pump yet. Ethereum spot ETFs, they poured a bit of gasoline on the fire, but didn't really get the spice going. But what's coming next is the spot altcoin ETF era, and it's going to change everything. And spoiler alert, it's already happening. You see, Wall Street, they're not stopping at Bitcoin and Ethereum. Sorry, Bitcoin maxis. It was never going to be only about Bitcoin. In fact, they're eyeing up almost every major altcoin at this point. Even Bloomberg's senior ETF analyst, Eric Balchunas, is surprised that we haven't seen a fartcoin ETF filed yet. Make no mistake, the hot air rises. It's coming. That's how many ETFs are in the works right now. And when the approvals start rolling in, and they're just starting to now, by the way, the price action isn't just going to heat up, it's going to absolutely melt faces. So let's break down why altcoin ETFs could be the next super cycle catalyst, which coins are lining up first, and how big the gains could be. So let's talk about the 4 altcoins that are leading the pack here, and that's XRP, Solana, Litecoin, and Dogecoin, commonly known as Bread Garlic House, Salami Coin, Charlie Lee Coin, and Dogecoin. Dogecoin's just Dogecoin. Now, these 4 are being given a 90% plus approval chance of getting approved this year. The timelines are a little less clear. It's believed these altcoin ETFs could get approved as soon as July, with high odds for a Solana ETF being approved sometime this month, but also as late as October, with that being the final deadline for a decision. Now, love them or hate them, these coins are first in line. XRP, definitely love hate coin, is one of the most battle-tested altcoins when it comes to regulatory drama, and it has survived a whole lot of bullshit. Now, Ripple CEO Brad Garlinghouse is dropping its cross-appeal against the SEC with his legal case fully in the rearview mirror, basically at this point. It thus paves the way for the green light on 7 XRP ETF applications currently on the SEC's desk. Bloomberg analyst James Seifert believes that these XRP ETFs would be considered a success if they see in excess of $85 million worth of inflows in their first week of trading, which doesn't feel like a big lift for me. And according to JP Morgan, these XRP ETFs could see as much as $8 billion in inflows in the first year. Standard Chartered Bank is predicting that XRP could jump to $550 by the end of 2025 with the ETF in play. But if it's some hopium you're after, then analyst Zach Realtor has used the market cap multiplier theory to predict an XRP price of $15 if the inflows hit $4 billion. This would then mean that $8 billion of inflows could give XRP a price tag of $30. I'm apparently not bullish enough on the Bread Garlic House coin. That would be some heck of a rally, by the way, given that the price is currently just around $2. Now, if you thought 7 XRP ETFs is a lot, then wait for the Salami ETFs, okay? There's 9 of them. 9. But before we break down the Solana situation, guys, if you want to start trading XRP, Solana, Bitcoin, Ethereum, Dogecoin, whatever you want, you want to start getting in before the ETFs hit the market, then you got to get yourself an account over on Unix, the best place to be trading crypto coins these days. It is a no KYC cryptocurrency exchange, but you get to trade with complete freedom over here on Unix. It's available to anyone, anywhere. Got all the big coins, deep liquidity, and here's the deal they have right now. It's a killer deal, so listen up. When you use the link right down here to get signed up to your account, you are going to get up to $400 in deposit bonuses. So you deposit $1,000, you get $200 back. You deposit $2,000, they're putting $400 back in your account. That's crazy money. Plus, you can get up to $9,000. I said $9,000. $9,000 in trading bonuses. So the more you trade, the more bonuses come back into your account. It's a pretty crazy deal. Limited time offer. Link down below. Go check it out. Okay, Salami Coin ETFs. Look, it's looking likely that this will come with these ETFs for Solana, that they're going to have staking features built in from day one due to the application amendments that are currently being filed. And if that happens, then that's going to drive a whole lot of fresh liquidity from Wall Street, because we know they love making that passive yield, baby. And Solana staking rates are really good. It's around 8 8.5%, something like that at the moment. So I guess we're about to find out sooner rather than later too, because the first Solana staking ETF has gone live this week. But here's the catch with the new Solana staking ETF. It's not actually any of the 9 ETFs currently on the SEC's desk. It's actually from the guys over at Rex and Osprey. It's the Rex Osprey Solana staking ETF, offering yield exposure through a different structure than a traditional ETF. 40% of its holdings will actually be securities through other Solana-based ETPs to qualify under the 40 Act structure. So it's really kind of not a Solana spot ETF, kind of similar. It's a Solana ETF. So there's no real full spot ETF yet for Solana. It's a signal though, and day one trading results for this ETF were actually pretty good, despite it being really a no-name ETF shop and absolutely zero hype or, SEC sort of attention or any stuff like that. So wait until Fidelity actually launches theirs. Then we're going to get a real feel for the amount of demand for a Solana spot ETF. It's clear that Wall Street wants it on Solana though. Because of this, it's believed that the SEC may act early on Solana ETFs and could approve them as early as this month. There's a lot of chatter going on that we could see Solana ETFs approved literally any day at this point. So July is definitely the month a lot of people are watching for. JP Morgan estimated back in January that Solana ETFs could bring in between $3 to $6 billion worth of inflows within the first 6 to 12 months. But if the staking feature gets approved, it looks like it might be getting approved, then these estimates could end up being way too conservative. And when it comes to conservative, there's no coin that feels more conservative these days than Litecoin. There are currently 3 applications for a spot ETF for Litecoin filed by Canary Capital, Grayscale, and CoinShares. So not exactly a top tier, except for Grayscale, I guess. Not exactly top tier providers, unlike Solana, which has like Invesco and Fidelity and ARK and stuff like this. But anyway, JP Morgan still believes these could see between $290 million to $580 million worth of inflows in the first year. And for a market cap coin of around $8 or $9 billion, it's pretty substantial. Now, based on the adoption rates of the Bitcoin and ETH ETFs, it doesn't sound too far off, to be honest, when you take it as account for market cap. Grayscale's John Hoffman estimates potential inflows between $400 million to $500 million based on Litecoin's current market cap and a rough benchmark of about 5% institutional allocation. Now, I know what you're thinking. We're really getting a Dogecoin ETF. We're really going to get a Dogecoin ETF, guys. Love it or hate it, it's happening. Dogecoin ETF applications are getting very interesting. See, Bitwise has revised its application to include in-kind redemptions, which, if approved, will allow investors to exchange ETF shares directly for Doge. All you do is give them your Doge, they give you back an ETF. It's pretty crazy. SEC Commissioner Hester Pierce has already signaled that in-kind redemptions are indeed coming for these altcoin ETFs, and that will unleash a whole new wave of liquidity into the market. Now, if a Dogecoin ETF were to capture 10% of Bitcoin ETF inflows in the first year, it could see inflows around $4 billion, which seems pretty optimistic in my mind. But that's without factoring in the impact of in-kind redemptions. But then if Dogecoin gets in-kind redemptions, everything else will too. Hard to say with something like Dogecoin if it will really be that popular on Wall Street. Maybe Elon Musk starts posting about it again. Does it even matter? I don't know. But can Doge 10x off of an ETF? Probably. It doesn't stop there because the next wave of ETF candidates are already forming. Cardano, Avalanche, HBAR, they're all coming, man. Cardano and Avalanche are technically next in line based on Bloomberg's 90% approval odds, with final decisions expected by the SEC for these two between October and mid-December. In fact, the Grayscale Digital Large Cap Trust has just been approved to transfer from a trust to an ETF. This trust contains Bitcoin, Ethereum, XRP, Solana, and yes, even Cardano. So if it's good enough for that ETF product, why is it not good enough for a standalone ETF product? Spoiler alert, it is, and it will be. Well, it may not be approved yet, the digital large cap fund from Grayscale, to go to market. It is a sign that even coins like Cardano are definitely getting ETFs. Now, beyond that, there's Sui ETFs, there's Aptos ETFs. Altogether, JP Morgan expects over $14 billion in inflows across the entire altcoin ETF collective within the first year. That's a lot of money. Bitcoin got about $45 billion in inflows in the first year. Again, this could be super conservative here, given everything that's transpired in the market since they made this prediction in January. But still, even if that more conservative estimate's right, things are going to get real crazy for altcoins, guys. Bloomberg's Eric Balkunas has already told us that to get ready for a potential altcoin ETF summer, again with Solana likely leading the way. But here's what people are forgetting. Altcoin ETFs don't just bring in scraps of new liquidity. We're not talking about a bit of pocket change or money found under the couch. They bring in legitimacy, They bring in easy access and they bring in massive flows of institutional capital from Wall Street. They unlock access to new capital, by the way, pension funds, hedge funds, boomers who want crypto exposure in their retirement accounts, all that kind of stuff, okay? Plus, altcoins are way more explosive than Bitcoin or Ethereum, and they don't have the kind of overhang that the Bitcoin Ethereum ETFs had from Grayscale with billions in outflows coming. Lower market caps, thinner liquidity equals more upside when the flows hit. Most people are still asleep on what this narrative is really going to do for the cryptocurrency markets. Meanwhile, smart money is already positioning the ETF wave, but there's one more wild card that I don't really think anyone really was expecting this cycle, and that's altcoin treasury companies. It's crazy stuff, man. You remember what MicroStrategy did for Bitcoin, of course. Well, now that's happening for everything. All the altcoins, maybe not all the altcoins, but certainly some of the big altcoins are getting a lot of attention. So it's quietly happening in the background. Publicly traded companies are starting to add stuff like Ethereum, Solana, XRP, even more exotic stuff like Hype and Fetch to their balance sheets. Two publicly traded companies, DeFi Development Corp and Upexi, for example, now hold around over 600,000 Solana each on their balance sheets, worth over $100 million. NASDAQ listed company Trident Digital's raising $500 million to buy XRP. Bitcoin mining company Bit Digital will convert its Bitcoin over to ETH. If ETFs make altcoins more legit, then CFOs are going to feel even more confident in adding more exposure to more exotic altcoins to their balance sheets. Yes, it's toxic liquidity, but we're going to take it because it's liquidity at the end of the day. And that creates a second layer of demand on top of the expected ETF inflows and, again, layers of legitimacy to the entire industry. ETFs and corporate treasury adoption mean a 1-2 punch for supply shock, especially for lower liquidity altcoins. Don't fade it. It's going to be massive. Thanks for watching.